Hello, welcome to the European Open briefing for March the 3rd, 2017. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So the dollar, of course, yesterday had another strong performance. It's slightly off its highs today, though. It's pretty much holding near those multi-week highs ahead of the much anticipated speech by Fed Chair Janet Yellen later in the day, where she will talk about the US economic outlook. The recent upturn in expectations that there will be a rate rise in March has driven US Treasury yields, the 2-year yields, to 7.5-year highs, and that's supporting the dollar at current levels. The yen is a bit firmer, though, on the back of that softer dollar. We did have a mixed batch of data out of Japan today, though the focus was on the stronger than expected inflation figures out of Japan. And the main movers this morning, though, are commodity prices and commodity currencies, which are feeling the pressure of the strong dollar. So let's start with the dollar index. Here we can see in the chart that the dollar index, which measures the US dollar against a broader measure of other currencies, 6 major trading partners of the US, it's steadily been climbing higher over the past few days. It hit a 7-week high of 102.26 yesterday, and this is of course on those rising expectations that the Fed will raise rates as early as its March meeting in 1.5 weeks' time. Yesterday we had more strong data. US jobless claims fell to 44-year low for the week ending February 15, and of course, we had more Fed speakers sounding hawkish. We had Powell and Mester both speaking. Powell said that the case for rate increase in March has come together. Mester, who's known to be hawkish anyhow, said that the Fed is currently hitting its employment and inflation goals. And here in the chart we can see that all of these recent developments has pushed the 2-year yields on US Treasuries to the highest since 2009. It's above the mid-December peak, and that suggests that markets are now convinced that the Fed will likely raise rates soon. But the main focus now will be on Fed Chair's speech, where most analysts expect that the Yellen will confirm what other Fed speakers have been saying recently, that there will probably be a rate rise very soon. And there will be more speakers. The Vice Chair Fisher will be speaking, as well as Evans, Lacker, and Kaplan as well. So those should be watched later in the day. Moving on now to the Japanese data, because we had quite a bit of numbers out of Japan. Household spending was the weakest out of today's data. It disappointed by dropping bigger than expected year on year, although month on month it was actually stronger than expected. Core inflation, which is what the Bank of Japan targets, came in above expectations at 0.1% annually. That's above expectations that it would have been 0%, and it's up from minus 0.2% the prior month. So it suggests that Japan is finally moving out of deflation. Unemployment rate was also strong at just 3%, down from 3.1% previously. The headline inflation rate was 0.4%, and there's hopes that the higher headline figure will help drive up wages in Japan. Of course, Japan has nationwide wage negotiations every spring, so the Bank of Japan will probably hoping that the recent pickup in inflation will push up wage growth at the upcoming negotiations, and that would in turn should help push up household spending, which still remains fairly weak. Moving on to the commodity currencies, because they've been struggling recently. All the major ones, Aussie, the Kiwi, and the Loonie, are down against the dollar. The Aussie hit a 1-month low, 0.7542. The New Zealand dollar hit a 7-week low of just about 0.70, and the Canadian dollar is at an 8-week low. USD CAD broke about 1.34 level yesterday, and this is because of weaker oil prices for the Canadian dollar and weaker metal prices for the Aussie. Oil prices yesterday fell to a 2-week low. There's been some reports that that Russian energy minister said that it's too early to talk about extending the deal, the current oil output deal, beyond June. And also there were numbers out yesterday which showed that the Russian output in February was unchanged compared to January, which is still well short of what the amount of cuts that Russia had pledged in that output deal we had last year. So that has increased the negative sentiment for oil prices. Moving on to the economic calendar, we had retail sales out of Germany, which fell by 0.8% versus expectations that they would rise by 0.2%. The euro fell a little bit after that data, although it's still up from yesterday's 1-week low against the dollar. Coming up later, we're going to have the final services PMI out of the Eurozone, as well as the only PMI reading for the services for the UK, as well as the Euro area retail sales. In the US, we're going to have the ISM non-manufacturing PMI, but much of the focus will be on that speech by Yellen later in the day, when, if she does indeed confirm that there will probably be rate rise in March, we will probably see the dollar extend its recent gains. That's it from me. Thank you very much for watching and have a great day.